G'day everyone, it's Jeremy from Trading Safely. Thanks for coming in again. Sunday night, got Sean Downey with us. Evening Sean, over there in the UK, how you doing?
Yeah, pretty good. Frosty. Do you know what frost is, Jeremy? You ever heard of that?
I used to get a bit of frost when I grew up as a kid in Melbourne, but these days, you know, it's pretty non-existent. But I heard it's pretty cold over your way at the moment. -3, I had some friends tell me.
Yeah, it was about -6, -7 because we live by the river and very rural, so it gets even colder here. So, brass monkeys. Anyway.
Well, welcome everyone. Thanks for joining in again. Another mastermind session. You know, last week we had a chat about gold and dollar index, and you know, it was interesting to see those markets well basically perform as we expected. The dollar index held up this week. You know, I think a lot of people were, I mean, it's stripped off back to support, but a lot of people I think were expecting perhaps a larger fall, and it has held up. So another interesting week. So this week, look, we're just going to have half an hour here. First of all, just can someone come down the chat box and make sure that they can hear me? So if you just give us your name, tell us where you're coming from, and then we'll move on. But just while we're waiting for that, I think tonight we're going to have a look at there's a couple of markets that have had a significant change in trend, so we're going to definitely take a look at those and just see where the major levels are with those going forward for this week. And probably the big one that I'm talking about is the US bond market. And frankly, it's not the only bond market that's cracked some you know, major long-term trends. You know, the Australian 10-year bond market's done the same thing. I think the Bund has as well, perhaps to a lesser degree, but we're definitely going to have a look at the bond market tonight, because that would seemingly be, to me, a longer-term opportunity. But feedback coming through here. First things first, though, I definitely haven't ended the broadcast. Someone was saying I might have ended the broadcast. We're still going live here, so not sure what's going on there. But first things first, I just want to share screens and call up a disclaimer. Okay, guys. So this is really important information. You know, Trading Safely, we love putting on this webinar, but you know, we it's important that we run through this disclaimer, basically that we, you know, we provide cutting-edge proprietary trading technology and online education that assists clients in recognising that risk and return are equally important, but past performance can't be relied upon as an indicative of future performance. Any advice provided is general advice only and doesn't take into account an individual's risk profile or their personal financial position, and you should seek independent advice in deciding if trading in leveraged products is suitable for your personal financial situation. You know, our software can be used for stocks, futures, foreign exchange, derivatives, and CFDs. But the information contained on this webinar isn't intended for speculation, and we make no such warranty regarding opinions or forecasts in reference to the markets discussed on this webinar. So anything that you see today is neither a solicitation nor an offer to buy or sell any cash or derivative such as futures, options, and swaps. Financial instrument on any of the described underlying markets. No representation is being made that any financial result will or is likely to achieve profits or losses similar to those discussed. The past performance of any trading system or methodology discussed here isn't necessarily indicative of future results. Futures, options, stocks, and currency trading all have large potential rewards, but also large potential risk. So you must be aware of the risks and be willing to accept them in order to invest in these complex markets. Don't trade with money you can't afford to lose, and never trade anything blindly. You must strive to understand the markets and act upon your conviction when well researched. Okay, so that said, let's have a talk about, Sean, where do you think we should start? Perhaps the bond market?
Yeah, I think so. On the professional commentary, the original sell on bonds was back in August, mid-August. with the Treasury T-bonds and Bund, which is the 10-year German interest rate, gave a signal. Then was Gilts, which is the UK, and then again in October, remember there was another set of sell signals, and we actually broke down. So the breakdown was 6 weeks or so, 6 weeks ago, and the targets were a long, long way away, and we still haven't reached them. We've had a bit of a bounce in the last week or so, or it's sort of stabilized at awful. But some of these targets are still a long way away. As usual, the market works out something's happening a long time after we've already said it was happening. So bonds remain in trouble. The real question for people who are trading equities is whether rising yields at some point impact the stock market. At the moment, it's not really doing that at all. The market remains fairly bulletproof unless you're in tech on the Nasdaq. But there is always the chance. I certainly remember in 1987 that yields actually started rising in the July, 3 or 4 months before we got the real crack in equities. So there are some delayed correlations and reactions that can happen. So from an equity point of view, it's something you have to be aware of. Technically, Europe market's poor. They all had sell signals last week, and the Nasdaq has also had a sell signal and a small sell signal on the S&P 500, but the Dow is very strong. So got to be a little bit careful there, but I don't think that the bond route, as they call it, is over yet. So I'm looking to position myself for another leg down.
Yeah, and we look at the chart in front of you, everyone, is 30-year bonds in the US, and the black uptrend channel that's been sort of in place since 2011. It's clearly been broken just recently. I'm just drawing a little rectangle there. And the market's now just come down to a critical support level, which is where we bounced off on Friday. But if we put in some other major supports, all these different coloured lines that we're looking at are basically supports from much higher time frames, like monthly, quarterly, and weekly. So we've held a major monthly support down here at 151. Look, at the back of my mind, Sean mentioned equities. The Dow looks like it's charging off furiously, but there are signs of weakness certainly in European indexes and the S&P. And look, I wouldn't be half surprised if we did get a little bounce in the bond market. So to my mind, any bounce would be a selling opportunity, but there is some room from where we are currently, possibly back up to this break line, up towards sort of 158 area. So I think that's probably one really interesting thing to watch this week, because we touched on this last week. The bond market's got so much money invested in it that when you get a break like the one we're looking at here, it's really, really significant, because the money is going to go find a new home. And to date, over the last little bit, it's been the Dow and the S&P, and going forward, that'll be one to watch where the capital is going. So Sean,
it's not going into gold.
No, it's not going into gold, actually. I might jump back to gold. Or jump back to the Chart IQ program, everyone. So here we go. And there's some new watches tonight. So here we have spot gold. We're going to add in, I'll just run through setting up our setup again for people that haven't watched before. But first we'll put in our...
I can't see the Chart IQ.
Oh, okay, coming. Yep. Let me just fix that up. Okay, how's that?
Yeah, that's better.
Okay, so first we'll just quickly build in long-term support and resistance where we take our buy and sell signals from. I know I ran through this weekly, but I'm just going to do it again so people get used to what it is that we're doing. So we're overlaying long-term buying and selling zones, and they're very powerful because we've qualified the calculation that works these levels out. So just bear with me. Yeah, so gold. Last week we were talking about gold needing to sort of close under that magic 1200 level, and then had a fair bit of work to do around 1175, which is last year's midpoint. So if I add this study down the bottom, it's going to add in support and resistance from multiple time frames. So just bear with me while I set up. Once again, this highlights the fact that we're drawing down from time frames from yearly, semi-annual, and quarterly and monthly, all onto the daily chart that we're looking at right now. And so importantly, we did close last week under 1200, and then we back tested the level during the week and was rejected. So it's held on to last year's midpoint, and the weakness still remains. And I mean, for me, Sean, I'm not sure about you, but for me, it needs to be back above that 1210, I guess, before I start worrying about gold taking off. It's been showing ongoing weakness, so I'm not ready to be buying that today, even though we do have that Italy referendum, and that may cause a bit of volatility. What do you think, Sean?
Yeah, I agree. On the subscriber list this week, I pointed out that I got involved in Code Dust, DUST, which is a bearish ETF on gold. It is very volatile, so I got involved via the option market. So I bought some February 65 calls. So I've limited my risk there. Risk was about $10 a share. So, and that's all I can, it's going to run till the middle of February. So I've actually got involved there. So yes, gold could bounce. The Italian referendum is a bit of a curveball. From what I've sort of watched it from afar, it seems as though it's priced in for the referendum to be rejected, which would be supposedly negative for the euro. But when that's what the result is expected to be, it could well be that it's already in the price. So by tomorrow evening, Monday evening, we'll have a clearer idea of where the euro is going. Professional commentary has been short the euro pound for some time, and it's closed right at its control point from the previous uptrend. So pretty pivotal point for the euro against the pound tomorrow and Tuesday.
Yeah. Might just I'm just thinking what to have a look at next.
Well, shall I go through what came up on the individual stocks this week? We can go through those.
Yeah. Yep. Okay.
Yeah.
So just for the people that are new, we have some scanning technology that basically runs through global stock markets and global foreign exchange and futures markets. And what we try and do is the scan picks up support and resistance, and when our signals sort of align with those, then we go and have a look at them. So Sean's just going to cover some of the stocks that have sort of been of interest this week, and our subscribers get these signals well in advance each week. So this is a little bit of an update of what's been going on. So Sean.
Okay. Well, the first one to call up is M for Mother T, which is Lockheed Martin, and defense stocks. Obviously, Trump's going to build some bombs, isn't he? Walls and bombs, wasn't it? And there was a buy signal ahead of Trump, came up to its final resistance, and then a sell signal appeared on Wednesday. Because of that Trump factor, for the subscribers, it was meaning that they should take profits if they were long. So it was an exit signal. Take your profits. It had moved around 10 to 12%. So that was one that is now been exited. The next one is DIN, N for no.
It's interesting. Sean, just looking at this stock, it's interesting when we have a look at the study below how you know the amount of time it took between highs, and then you know the risk is very low here. I guess is what I'm trying to say for the people that are listening, because we've now got a sell signal up here. We've waited for the market to come all the way back. So if you were long, then yes, okay, time to exit. But if you were looking to come in here as a short position, by virtue of the fact that we've waited for price to come back up here, and now we've got a sell signal, the risk is very well defined, and that's what that little pink line is at the top. That's our stop loss line. So I'll just sort of throw that in.
Yep, people do have permission to get short if they want to. Yeah, DIN, N for no. So this has been a long position for a couple of weeks or so, and the thing that happened here was it confirmed a breakout, and it got very close to the trailing stop. So that's that brown line that's coming up, which is at 83.32, I think. Yep. And you see that actually, I think it just about touched it. One of the things about the trailing stop, that brown line, is we're interested in it being broken on a closing basis, not just going below it during the day. So came back to that support point, and they performed very well on Thursday, and came back a little bit. So that 83.32 point is the place to keep your eye on it. Next one is TITN, N for no, which is agricultural machinery. Now their results came out, talked about this before, where I really like what I call good news, bad action, or bad news, good action. And this is a classic example of this. The results came out on Wednesday, and they missed. So they came out before the opening on Wednesday. The stock was down initially and then roared higher. So that is a power play signal. So just to tell you what created that buy. So bad news, good action. No rhyme or reason why. And since then, it's just paused and gone sideways. The market has drifted back a little bit in that time. And what I said on the subscriber list was I was waiting for some sort of pullback. So that pullback could come around the high $12 and see what we get there. So, but it is definitely a breakout. You can see it on the study below. It's got a target of around $17. So a little bit of room to run. So in the down market, we can still get buy signals. That's one of the things that's coming up here. The next one is Disney, DIS. And whenever the scan brings up signals, I do go and have a look at a couple of things. I want to make sure the results aren't coming out within the next week. If they are, I'm not going to get involved. And secondly, is there anything going on in the background in a stock? So I do a little bit of searching. I don't go too deep. I just go into the Yahoo Finance website. And what was interesting, what I did find, I actually found it on a place called Zero Hedge, which definitely has a health warning associated with it, because everything they always write is negative. So don't take everything they read as gospel. But there was an interesting thing. They own ESPN, the sports television satellite company, and they're hemorrhaging subscribers because of online streaming, various things. And a little bit like what's happened in the UK with Sky, they paid vast sums of money for American football, basketball, all those sorts of things. And for Disney, they've lost about 100 million a year in revenue just in the last 6 months or so. So a bit of a negative background story. I had no idea that Disney owned ESPN. So we had a sell signal. You can see there's been a few signals over the last 6 months or so, a bit like Lockheed Martin. It's come back to previous resistances, and there was a sell on Wednesday. So some people could be involved in that one. The next one is GPN, N for no. And this was my favourite one of the week. So I think the sell was on Monday or Tuesday, and we've already slumped considerably. Had a bit of reaction on Friday. The reason why I liked this one more than others is it was actually the third sell signal since the top was made about 6 weeks or so ago. And what's happened here is the market had broken down previously, then comes back to the breakdown point, which is that blue line, and then restarts again. So market reacts back up, goes back to where it originally broke, and slides back down. They are to do with, they're called global payments. So I think I'm not quite sure exactly, maybe a sort of version of PayPal. Next one is PPG, and some sort of industrial company. I can't remember what they do now. Wasn't anything to do with. They also had their results and went higher initially. The results were ahead of the market on Wednesday, and then reversed and gave a sell. So in that instance, we had bad news, bad action. So that was an actionable one. Next one is UFI. And this is a financial, came up the same day as the GPM one. It comes back to the final resistance, and again, it's had a pretty poor week. You can also see that it came up on the study below towards that annual level, so that's drifted back down again, and the trailing stop is starting to tighten the risk considerably. And the final one is CLX. And just while that's coming up, it was interesting in that there was the day that the Dow made, the S&P made its top, we reversed back down a little bit. And what was interesting to me was the actual number of sell signals that appeared. So I'm scanning about 3,500 stocks, and out of that lot, I've got about 30 sell signals, which doesn't sound like a lot, but the system is quite rare in what it finds. So we don't, like on Friday, for example, there's no signals at all, not one for me to look at. And that told me something about the market. So, well, it doesn't appear to be doing a huge amount, but actually lots of sales coming up. So this is CLX, very similar to GPN in some ways, in that it's been going down for some time. We broke down in November, and then we bounced back up towards that original breakdown point and had another sell. And there's a support point, the blue line at around, I think, 110. And then 102. So that was the signals in America this week. There was no signals at all in the UK. Nothing was actually there.
And Sean, it's always just worth reminding for our new listeners. Do you just want to comment on, the fact that not all signals are taken? When we look at the screen here, we can see numerous signals. But do you just want to explain to everyone why we don't take every signal, and that this isn't a black box?
Yeah, there's a few things. That's really why vast majority of subscribers also take the scanning list as well, so that they don't have to go looking themselves, or so they're getting our professional input of saying, doing the hard work for them and scanning it. The thing about it is it is a grey box. It's not a black box. So a couple of things: is results coming out? Was the move caused by some sort of story? So could be a random story, for example. So if you call up Apple, for example, AAPL, there was a buy signal a while ago. It wasn't results, so I think it was the most recent buy signal where we gapped higher in September. Yep, that one there. Yeah, and that buy signal was the day before the iPhone 7 launch. Now, so we get a buy signal. They're going to launch it that evening. Do we get long, or would we say, do you want to get long? Well, no, because we don't know whether the market's going to like the iPhone 7, do we? After the launch has come out and the price has gone higher, then you could say, right, fine, the market did like it, so I can do something afterwards. So there's an element of understanding what the background is. So that's really important. And also the pattern that's coming up. So I like to see a sell signal that's possibly at the final resistance. Yeah, so it's the final level. And so then what happens? It's very easy to know that you're wrong. So Lockheed Martin would be an example of that. It's up at its final level. So if people want to get short, the risk is tightly defined, and it's very easy to say, right, I'm wrong. This market is now going into all-time highs. So final support and resistance important.
Yep.
I'm also looking for whether price breaks down and then comes back to the breakdown point or breaks up. So, for example, if you do Netflix, NFLX, that would be an example of a stock that had broken out a while ago, and then a week or so ago, it came back to that breakout point at 112, and there you go. Yeah, so broke out higher on results back in October, went right up to that final resistance, didn't actually provide a sell signal, and then we come all the way back to that breakout point, and then you've got to buy. So those are the sort of things I'm looking for. And actually, its performance on Friday was very good, wasn't it? Considering what the market did.
Was, yeah.
So there's a few things. As people get used to what I'm writing, then they get into the swing and the rhythm of what I'm looking for. And that if they find things themselves, they can always send me an email, which a few of them do.
Yeah, that's true. I've had that's a good point, Sean. I've had a couple of subscribers come in just with ideas themselves, and they're like, okay, let's have a look at analysing that particular signal, and we've worked with them, you know, to assess the merits of that. But over in Australia, it's been a fairly quiet week. There's a trade that came out on Friday. Obviously, I can't, it's for our subscribers, but we did have Commonwealth Bank last week, and we'll just call it up to have a quick look. That's been a sideways pattern all year. It's the biggest, one of the biggest stocks on the Australian Stock Exchange. It's had numerous attempts at the bottom and the top of the channel. Whichever way it breaks, it's going to have a lot of energy in that direction. I mean, that's sort of sideways pattern inevitably leads to a powerful breakout. So, you know, we had this signal on last week. It was a valid sell at resistance. You know, we're trading under annual levels from last year, so the market's still in a bearish, very much a very bearish position. You know, the stops are up here through the week. We're back tested. Look, you know, if it were to break high here and close above, it's almost a buy and reverse given what's gone on through the year in the sideways pattern. But for now, the trade's still good, and it's still definitely a sell signal. And we wouldn't be exiting unless we had a daily close over this pink line. But that's really, Australia's been fairly quiet. America's been had all the action. I know we're sort of coming up to half an hour, so I might just revert back to having a look at some of the other global markets. I'm just going to pull up the 30-year bond market again in the US to see what our program's saying. I think last week we touched on this, that the market is at, you know, a fairly critical level. The double blue lines here down around 151, and the double orange lines. The orange lines are weekly level. Yearly levels. So big level. I'm half expecting a bounce out of here, but we'll just have to see. At the moment, there's no buy signal, so there's no reason for us to do anything. We just have to sit and wait, and I guess we'll get that information earlier this week. But if we were to move over to, you know what, I might even just drop back to, just bear with me, guys. I'm going to change charts again. Okay, here we go. So I just wanted to have a look at, you know, last week we looked at the dollar index. Let's just have a closer look at that. So this is a monthly chart, dollar index going back to 1984. If we just kind of zoom back in on it, we can see last month that we closed above this critical long-term trend line. It looks like it's back testing support. Any move higher is going to open up a lot higher on the dollar index. We're pretty bullish on that one over the longer term. In terms of the euro, I mean, that's probably topical given what's going on with Italy at the moment. This is a monthly chart of the euro, and you know the angles of the trend lines sort of give the game away. The market's, you know, it definitely you know, sort of longer term downtrend at the moment, and if that low gives way this week with Italy, then it's going to open up much lower, you know, potentially down to that 95 area, and could even drop longer term all the way down to this sort of 60 zone. So euro looks like a bit of a basket case at the moment. Sean, what do you think?
Yeah, I agree there. If we're actually 106.56, I think, on basis futures was a breakdown point. We've been below it, and we keep on trading either side of it. But after, there is no support on the way I'm looking at it. So whenever markets do that, I'll always write something like, I say, okay, so like when bonds broke and the targets were along a wire away, so what's got to happen? The market's going to have to find support based on its own momentum. So in other words, there is nothing to hang on to. It's going to have to create something. And the euro is trying to do that, but not doing a particularly good job of it. So if we do start breaking down after the news out of Italy, and we've also got the Austrian election as well, then, you know, it could drop very, very quickly, and then it would have to find its own support. So pretty much,
yeah. And look,
I think, anyway.
It's going to be fascinating this month. You know, we're at the end of the year as well, and that's the most critical. That's the biggest time frame, so that's the most powerful period. So, you know, if we do have a disaster, a bit of a significant move down here over the next week or so, and we start closing the end of the year down here, then it's just, to my mind, opening up a lot lower, and you can see just how far the euro could potentially drop. The pound's had quite a reaction this week up. This is weekly pound chart, and you know, the long-term angles are clear for everyone to see. The pound is definitely in a long-term downtrend, and last Friday it just tested the top of the channel. You know, if it was to start breaking higher than here, then it would open up, you know, levels much higher up towards 139, which sort of seems unlikely, but I've seen stranger things happen. But that obviously had, for the euro pound, Sean, it's obviously the euro pound, if the pound's rallying and the euro is looking pretty deathly, then the euro pound is a pretty good sell. And I know,
yeah, that's a good example of Christmas and birthdays when trading currencies. So you've got a euro that's inherently weak potentially, and you've got a pound that's inherently strong, which means the cross is going to move a lot more. So 128.24 is the level on the pound, which isn't very far away. That is one of the breakdown points. I talked about that earlier. Closes above there, then there's a lot of upside. You've got to remember that the market is extremely short the pound as well. All the sentiment is the same way since Brexit. So the market could rally considerably just with people getting out of strategic short positions. So it could be a double whammy for the euro pound, that's for sure.
Yeah, I mean, I'd think all my Christmas would come if we got back to the top of this channel here. But right now it's one day at a time. There's no indication that we're out of the current channel that we're in. So it should be a pretty interesting week, and that's an interesting one. I think we already touched on 30-year bonds, Australian 10-year bonds. I like to look at this one. You know, Australian bonds are following suit. I'll just take away. We'll come back to the support and resistance. But if we look at the longer-term channel, you know, the 10-year bonds have dropped basically into a big area of space here, where the market can fall quickly. So, you know, half expecting a Sean, what are you half expecting this week? For me, I'm half expecting a little bit of bounce potentially. I mean, we haven't got a buy signal yet, so I can't confirm that. But my gut's saying we might get a bounce in bonds, and we'll just have to see how equities respond off the back of whatever happens in Italy. But you'd have to think with all that money sloshing around in Europe, it's going to have to find a home. And not only money coming out of bonds, but if money has to come out of Europe and find a home, it's like, well, where does that go? Well, what are you thinking, Sean?
Goes in the down. People, to a certain extent, go searching for yield, and the big caps where they want to go. They also buy the corporate debt. So if you're looking for a safe haven, then go and buy some Coca-Cola debt, and you'll get a guaranteed interest rate on it. And Coca-Cola isn't going bust, is it? So I think it goes into the really big stocks, and that is a pattern that's been there for quite a while, and I don't see that changing. I think with the Italian vote, I wouldn't be surprised to hear Super Mario Draghi coming out and saying he's going to buy every single piece of Italian debt that's ever been issued, and prop up the Italian debt market, and that could cause a bounce in the European bonds. To me, that would be temporary, and just give me an opportunity to get back on the short side. So wary of Draghi, as always. I mean, there's always a joke that goes around that once he's finished buying all the European debt, he's then going to start buying Italian banks' furniture, and their dealing desks, because he'll buy everything. And so there's no reason to think that he'll stop doing that, even though it's an exercise in futility and madness. He'll carry on doing it. So bonds maybe for a bounce. We'll see it from there. And big cap equities. One thing we haven't mentioned, for those who are a little bit new, traditionally we have what's called the Christmas rally, in stocks. The reason for it is market makers don't want to hold any big positions, and so they don't want people to sell them stock. And so what they tend to do is just mark up stocks. The spreads get wider, and they mark up the stocks to sort of discourage activity, or make the spread wider and that sort of stuff. So prices tend to drift higher. It's a little bit early. We've only just started December. Normally the rally probably starts a week to 10 days before Christmas. But again, it's something to think about. So short term, Europe is negative. It could be a very short-lived thing. And then we start drifting back up again. And then I do my end-of-year report between Christmas and New Year, and see what's out there for next year. But beware of the pre-Christmas rally.
Yep. I might just stop sharing now. So probably a good time now if you want to ask any questions. Now's the time. I know most of the states is asleep, so unfortunately we can't get those questions live. But if you do have questions, make sure you do contact us. And I'm just going to type in our email address now. It's help@tradingsafely.com.au. Okay. So if you do have questions, make sure you get in touch. If you want to get involved, please email us, and we're happy to talk to you and have just an initial consultation to discuss what it is that we do. And are there any questions at the moment? If anyone's got any pressing questions, any markets that they want to look at, perhaps just sing out. And I guess just while we're waiting, look, the replay is going to get sent out if you want to have a look at this again. And Sean, any other final points?
No, I think that's a wrap. I think so. And we'll see everyone next week.
Yeah, okay. All right. Well, all the best this week, and trade safely, and we'll look forward to seeing you next weekend, guys.